Moon Platoon, my name is Andrew. I'm just an assistant to Professor Meatball, a data scientist, a Corgi graduate from the University of Corgell, and I'm here to give you guys the data dive deep technical analysis that you guys are looking for today, Tuesday, April 20th, 2021. So we have the price action of GME and AMC. We are not only going to cover a little bit about the psychology of what happened earlier today and what this major dip is doing here, staining our crayons with red today, but we're also going to cover the data that you need to learn, as well as a quick MACD overview of how bullishly we are traveling towards perhaps a second squeeze. If you guys did want to check out more of the data, do check out the Twitter updates that we do on a daily basis on Andrew Mo Money. That's where I am on every single social media channel. And now we're going to talk about something that I am going to poetically call this cheater's ladle here. You can see it here in AMC, and you can see it here in GME as well. It's a gap between the volumetric and weighted average price and the moving average here. So why is this important? Well, it's because we have different members of the trading universe, right? This is the extended trading universe, the Marvel's extended trading universe, and we have normally people who are excited to buy. They usually take any indication to buy as positive, and so those are going to be the bulls, the ones that have the long positions in the stock. We also have bears, right? People who are a little more skeptical, and they will be skittishly moving away from buying and to sell if the going gets hard. But then we have these technical traders, which can composite the bulls and bears as well, that care about different indicators. Here we have the moving average right here as perhaps an indicator that they care about, or we have the volumetric weighted average price, and we can have the VWAP right here to this orange line, and we have the moving average right here to this blue line. And what is this purple line? This is the 200-day exponential moving average, right? Gives us a macro view of the momentum. But for now, all you need to understand is that we have two different indicators that could act as a sign of true price potential, right? We have these stocks that they trend up and down their prices, but we want to be able to predict them. And we want to be able to predict how much overvalue or undervalue potential does a stock have. So this is the question that people are constantly asking. Is the price of the stock worth more than blank? And when we take a look at AMC's moving average, let me continue to highlight that in blue. It moves downward here. And if you guys are seeing a pattern all the way to here, the price stays underneath this moving average. So every single time when the collective group of people, the bears, bulls, bears, technical traders, and then the apes, the people who buy in on the stock and hold, perhaps that's you, these people are all looking at the stock, and at pivot points like this one, they're going to ask the question, hey, is AMC worth more than this specific price? And the people that care about this blue line here say no, because this is the price that AMC should be in. So when they get too close to this price, they sell. So these technical traders are looking at the EMA to see whether or not this is a price worthwhile, and 3 times they are going to reject. Right, so we have the EMA rejecting the price 3 times. Now, let me highlight the VWAP here. The VWAP comes around, and when the price action actually pushes above the moving average, we have the VWAP tag teaming in. It's like a relay race, and rejecting the price there. So from there, we can look at the space in between these two metrics as a sign of manipulation. The VWAP only cares about volume, right? It cares about how much price action moves based on the proportion to the amount of volume, because at the end of the day, technically volume and price should affect the price of the stock, right? That volume of how much selling and buying action there is. However, as the VWAP starts to fall in the very beginning, right, to a paper-handed event, a lot of volume in a very short amount of time, as people panic sell, then it tapers off, and we start to see that much of the price action that drives the stock afterward is not based on volume. Right? It's based on whatever the simple moving average continues to follow. It is going to, at the end of the day, follow pretty much the price, despite what the volume action is. We can see this in parallel over on GME as well. So if you guys were waiting patiently, we have GME trending down this path and then hitting every step of the way. 1, 2, 3. It's hard to tell exactly how many times GME tried to hit this moving average line, but ultimately it does break through right here and immediately afterwards gets caught by the VWAP here. This allows the stock to oscillate between two very tightly compacted support and resistance lines, especially since here you can see that the price action of the stock actually bounced exactly as so. So this squeeze of momentum basically predicts a pennant right away. You can basically expect a pennant directly from a downtrend here, which is how Elliott waves form. You can notice that we are looking at this trend here coming down, and this is a multi-part correction, which normally isn't sustainable. However, now you understand that as these moving averages and the volumetric weighted average price and other indicators move downward, they act as a lid for the price action downward, and we can see it actually act as a booster if the price action was upward. Imagine that this was either the MACD, either the volumetric weighted average price or the moving average, and then the true price action trends above it, and every time it wants to dip below, the people who care about technical analysis, looking at the moving average or the VWAP, they're going to say, well, the price of the stock isn't worth less. So that's why every single time you might see this zigzag formation coming off of a higher and higher level of support, because the people trading right now are tossing their vote for the amount of other indicators that perhaps if you weren't trading on a technical tool like Webull, you would not be able to see. So I'm going to now run through a quick article on MACD, but now that you have a better understanding of these financial concepts with the help of our friends GameStop and AMC, I think it's time for you to drop a quick like to defeat that YouTube algorithm. Help us get over to 78,420. That is the subscriber goal for the day. And let us open up that MACD article so that we can show it off. The MACD on GME is showing bullish signs. So we have the MACD right here, right next to my head on GME. So let's take a look at what kind of bullish signs we can see. Obligatory, this is not financial advice, and make sure to give an upvote to user names Hassan. Okay. Hello, my fellow apes. Obligatory, this is not financial advice. They wanted to share some data around the MACD in relationship to GME. If you guys don't know what it is, here's a really quick understanding of MACD. Moving average convergence divergence, which is what it stands for, is a trend following momentum indicator that shows a relationship between two moving averages of a security's price. The MACD calculates the 26-period exponential moving average, the EMA, from the 12-period EMA. So this purple line here is a 200-day EMA. We can even change this in Webull by going up to the indicators, which is the first tab, and then moving all the way to the right to edit indicators. And then from here, you can change your EMA. Right now I have it at 200, right? But you can change it to 26, which is the line that it's subtracted from, right? So that makes the 200-day was a lot smoother, you can see, and the purple line now follows the blue line a lot closer. And from here, you can even change this to move this EMA to the 9-day EMA, which is also known as a signal line. So if you change this to the 9-day EMA, suddenly this purple line looks a lot more familiar. It's this blue line. It's the exact same as this blue line down here. Let me let you see. This blue line down here, which is the exponential moving average 9-day, that's the same line as this purple line now, which is also known as a signal line. So let's bring this back and continue onward. Move this back to 200-day. Did that work? EMA 200. There we go. So the MACD here has been a pretty good indicator showing the rise and fall of GME. So whenever the MACD line, which is the 26-day minus the 9-day, crosses over that 9-day, it's a pretty common signal to be able to buy, and when it crosses under, it is time to sell. That's for day traders mostly, but on a macro scale, you can also use it for long-term investments. Here, you can see that we have a pivot point here and a pivot point here. So you expect that if I draw a straight line all the way up here, that would have been the best place to buy right here. And that's very close to the truth, right? You're normally looking to find a place that is roughly and expecting the MACD to start crossing over the signal line. So if you bought right here, that would have been a pretty good place to buy. But then this MACD line crossed over, and then you would have been starting from about 157 and gains of 159. That's not a lot of gains. That's why right now we're looking at the minute chart. It's a lot more for scalping purposes. But it is a fairly close approximation of when bullish momentum becomes bearish momentum. So there you go. Let's take a look at why GME's MACD line looks very bearish. It looks very bullish. The juicy part, MACD has been a pretty good indicator showing the rise and fall of GME all the way back in January. You can see whenever the two signal lines intersect, we see upward and downward trend of this stock. Let's take a look here. As you can see, the beginning of January, the two signal lines intersected, which then caused the gradual increase of the stock price to 300-400 range, and ended up at before the intersecting again at the beginning of February, where it began to decline to the 40s. So this is the positive indicator that you would have to learn how to read. If you guys have seen how much I love cheat code, it gives you a lot easier chart to read than the one that you're looking at right here. So we have a very similar histogram, but we call it the squeeze indicator instead of the MACD. Very similar, but when we expect there to be a pivot, there's a little green symbol right here that allows you to see it a little closer, right? So you can see it here. That gives you a better way to be able to read the chart other than basically eyeballing when the MACD is going to cross over. So if you guys want to check that out, it is in the description. It's not free, but it is in the description for you if you want to go check out Cheat Code Algo. Now that we have seen the similarities for January, let's take a look at February as well. So that's February, where the signal line crosses right here, about February 25th. As we had our second build up to the 300, the lines crossed again with the stock moving upwards, only to come back down around the third week of March, where the lines intersected once again, causing the downward push of the stock price. Now it says causing, but it is related to, right? Correlation is not causation. Okay, so now you've thrown some images with some colors and some lines, but what does that mean for the near future? Well, Ape, this means good things. Here's the current situation of the MACD for the month. So we're looking at that moving average convergence divergence line slowly creep up to the signal line right here. It's tapering off in terms of the slope. As you can see, the two signal lines are converging once again. We've had downward pressure of the price since the end of March, and once the blue lines overlap, we should see a push upwards, and from how close those lines look, it could be soon. In reference to the MACD, this is what they called a reversal. They want to preface this by saying that the downsides to the MACD as an indicator is that although it shows bullish signs, sometimes it draws false positives, as explained here on Investopedia. It also can kick you out of your position prematurely, or at the very least give you a false sense of this line, for example, right, trending upward here. And then if you were to try and get out now, you would have started to falter right around here. So if you try to get out here, but then it's time to buy again, you would start. This MACD line is a poor substitution for any other indicator that would give you a better sense and cut through the volatility. This volatility here is what's driving GME and AMC's price action here. There. On Investopedia, once again, one of the main problems with the divergence is that it often signals a possible reversal, but then no actual reversal actually happens. It produces a false positive, and we can simulate that here. You can look at a line like this, which is a signal line, and a orange line. I don't have orange, so we're going to have yellow here. that looks like it's about to cross over, and when it almost does, it's just going to trend underneath and perhaps get rejected by it, right? So this is something that happens often. You just don't know. Too long didn't read. MACD for GME is converging on the daily chart, which is in the past has been a bullish sign, which has pushed the stock price upwards. Both in January and February, when we had the squeezes, the MACD crossed over and has upwards momentum of the stock for several days. So in this sense, we are in great shape, right? We have bears, bulls, technical traders that have just taught you a little bit more about the moving average and VWAP, but we are the apes, and that's the most important piece. Thank you guys for joining us on that journey through technical analysis. Thank to those of you who make this show possible by pressing that join button or heading over to Patreon. We'll see you in the money.